The world of cryptocurrency trading is notoriously fast-paced. Prices can swing wildly in mere minutes. This is where crypto trading bots come into the picture. They are specialized software programs. Their purpose is to automate trading decisions and actions. Think of them as your personal assistants for the crypto markets. They work tirelessly, day and night, executing trades based on your instructions or preset algorithms. These tools are designed to interact directly with cryptocurrency exchanges. They analyze market data and make decisions to buy or sell specific cryptocurrencies. Then they execute these trades automatically on your behalf. This automation can be a game changer. It allows traders to participate in the market without being constantly glued to their screens. The core idea is to make trading more efficient. It also aims to remove some of the human limitations we all face, such as needing sleep or succumbing to emotional impulses. Their effectiveness depends heavily on the strategy they employ. Market conditions also play a huge role. The bot's configuration set by the user is equally important. For beginners they might seem complex, but many modern bots are becoming increasingly user-friendly. One of the most significant advantages of using crypto trading bots is their ability to operate continuously. The crypto market is open 24 hours a day, 7 days a week. Bots can monitor market fluctuations and execute trades at any hour. This means they can seize opportunities that might arise while you are asleep or occupied. Another key benefit is the removal of emotional decision-making. Trading can be an emotional roller coaster. Bots, being software, operate purely on logic and pre-programmed rules. This emotionless execution helps maintain discipline. Speed and efficiency are also paramount in the fast-moving crypto markets. Bots can process vast amounts of data and execute trades in fractions of a second. This speed is often far beyond human capability. Bots can place orders at precise price points. They can manage multiple trading pairs simultaneously across various exchanges. Furthermore, many trading bots offer powerful data analysis and backtesting features. Backtesting allows you to test your trading strategy against historical market data. Bots can also analyze current market data, charts, and indicators much faster and more comprehensively than a human. Understanding how crypto trading bots function is key to using them effectively. At their core, these bots connect to cryptocurrency exchanges using application programming interfaces, or APIs. Think of an API as a secure messenger. It allows the bot software to send and receive information to and from the exchange. This includes accessing real-time market data, checking your account balance, and placing buy or sell orders. Once connected, the bot operates based on a set of predefined rules or a more complex algorithm. These rules dictate when to buy, when to sell, or when to hold. There are several common types of trading bots, each employing different strategies. Grid bots place a series of buy and sell orders at preset price intervals, creating a grid. Dollar-cost averaging DCA bots automate the strategy of investing a fixed amount of money at regular intervals. Other notable strategies include arbitrage and market making. The integration of artificial intelligence is taking crypto trading bots to a new level of sophistication. Traditional bots operate on preset rules. AI-powered bots, however, can learn and adapt. They leverage machine learning algorithms to analyze vast quantities of historical and real-time market data. By identifying complex patterns and correlations, these AI bots aim to make more nuanced and potentially more accurate trading decisions. Machine learning models are at the heart of many AI trading bots. These models can be trained on historical data to recognize conditions that have previously led to specific market outcomes. Some advanced AI bots also incorporate natural language processing, or NLP. This allows them to analyze news articles, social media sentiment, and online forums. Predictive analytics is another area where AI is making a significant impact. While crypto trading bots offer compelling advantages, it is essential to be aware of the potential risks and downsides. The cryptocurrency market is inherently volatile. Sudden, sharp price movements can occur. Bots might execute trades at unfavorable prices or incur significant losses if their algorithms cannot adapt quickly enough. Technical issues represent another category of risk. Trading bots are software, and software can have bugs. Security risks are a major concern when using any third-party service that interacts with your exchange accounts. Trading bots require API keys to access your funds and execute trades. No trading bot can guarantee profits. Choosing the right crypto trading bot requires careful consideration and thorough research. Security should be your top priority. Look for bots from reputable providers. Check for features like two-factor authentication for your bot account. Ensure they have clear policies on API key security. It is wise to configure API keys with trading permissions only, disabling withdrawal capabilities whenever possible. The bot's track record and user reviews on independent platforms can also offer insights into its reliability and security practices. Ease of use and the user interface are also important factors. If you are a beginner, you will want a bot with an intuitive platform. Look for clear instructions and perhaps pre-built strategies. More experienced traders might prefer bots that offer greater customization and advanced charting tools. Many platforms offer backtesting capabilities. This feature allows you to test your strategies against historical data. Consider the types of strategies offered and whether they align with your trading goals and risk tolerance. Understand the pricing structure. Responsive customer support and an active user community can also be invaluable resources. In conclusion, crypto trading bots are powerful tools. Approach them with realistic expectations and a commitment to learning.